Political uncertainty and allegations of election fraud have now hit the still contested 2020 U.S. presidential election. And while there are claims that we may have a winner by the end of this week, judging by the way things have played out, it looks like election results will be contested in the courts, and decisions could drag on for weeks to come before the American people and the world know the final confirmed results of this presidential election. Hello, this is James Anderson on behalf of stbullion.com. Before we begin this week's Bullion market update, do me a favor and put your thumbs up vote on this video so that we can serve the precious metal related information to other like-minded long-term constitutional hard money savers. The spot prices for silver and gold rallied to end this week. The gold-silver ratio has dipped back into the high 70s as the Federal Reserve issued their November 2020 statement today, leaving accommodative, near-record low interest rate policies and rolling $120 billion a month bond buying program unchanged. The Fed began their statement by highlighting the viral crisis still ongoing, and by the looks of the latest data, increasing to record new case volumes as we head into the North American winter season. The Fed mentioned they're aiming to achieve inflation moderately above 2% for some time to come to make up for the supposed disinflation we have had in recent years. The central banks around the world are buying assets by simply drawing trillions in fiat currency out of thin air. Not only will that not stop anytime soon, it's likely to accelerate in the years upcoming. Of course, the financial powers are going to continue nominally propping up asset values. Today, bond billionaire trader and silver bullion bull Scott Menard had the following reaction to the Federal Reserve's begging of Congress for more financial stimulus.
Don't have a whole lot more power. They can push down on interest rates, but not do much more to stimulate the economy. So what message are they really trying to send with this really downbeat statement here? It's not like you don't know that there is a big COVID problem coming. Are they maybe trying to signal something to Congress here, go beyond the markets?
Well, I think so, Mike. I mean, I don't know if you agree with me on how unusual this essay is.
Oh, absolutely.
Right. Yeah, I think, there are two things. One is they're trying to signal to Congress that they really need to get in gear and get something done. I think they're also trying to signal to the markets that, at the end of the day, they can just keep buying securities. And I know Scarlett is a faithful reader of my commentaries. A few months ago, I outlined a path for the Fed that if things get really bad, they'll start buying equity ETFs to keep this thing from collapsing.
This past week on Twitter, the U.S. Mint celebrated the 55th anniversary of when the Republic of the United States of America began violating Article 1, Section 10 of the United States Constitution by making clad cupro nickel coins legal tender in payments of debt. Next year will be the 50th anniversary of the unconstitutional full fiat Federal Reserve note currency. We can have a brief look back at the collapse of the Roman Empire, knowing there is a direct correlation between debased currencies and fading empires. We're simply doing this at a faster rate, with enhanced technology helping to mask the destructive results to our collective culture and citizenry. Of course, infinite QE and further stimulus will come regardless of who wins this presidential race ultimately. But we end this week looking at silver under the assumption that the Democratic Party is able to win the executive branch starting in 2021. The Biden camp has infrastructure spending plans under what they call their new Green Deal. Bank of America strategists think Biden's green stimulus could push silver to $35 an ounce in 2021 and then take off on its third run up to the $50 region within the medium term. This would represent a remarkable percentage gain from the latest near-term price floor of around $12 last March. Goldman Sachs agrees with this prognosis. They stated on October 12th when Goldman analysts said silver will be an obvious beneficiary of a Biden victory due to its energy bias tilting toward renewable energy and solar in particular. Solar investment accounts for 18% of silver industrial demand and 10% of silver's total demand, he added. Goldman Sachs declared they just bought silver at $24 per ounce due to a few potential upward solar surprises in the coming months. Those expected upward solar surprises would include both the U.S. and China stepping up plans for more solar installations. Goldman's best case scenario is that global solar installations would increase by 50% between 2019 and 2023, but they could grow even faster under Democratic presidential nominee Joe Biden's plan to install 500 million solar panels in the U.S. in the next 5 years. Meanwhile, China could boost its installations by 40% in its new 5-year plan. Remember that a solar panel, if it's done correctly and not thrifted cheaply with copper, 2/3 of a troy ounce of silver gets put into each solar panel. And as we mentioned, Joe Biden's plan calls for 500 million solar panels. So do the math. 2/3 of that is a lot of millions of ounces of silver to go into solar panels, potentially. Regardless, whichever candidate wins, a coming monetary crisis and Fiat Federal Reserve note devaluation remains on our collective path, where a simultaneous, vastly increased store value demand for silver is going to cause industrial silver users to have to scramble for shrinking supplies. All of us, we will collectively be bidding these silver and respective gold spot prices higher in the next 4 years unfolding, no matter who wins. That's it for this week. Stay safe out there and take great care of yourselves and those that you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.